Elaine Kub is our grain market analyst this week. The USDA said Thursday at its Agricultural Outlook Forum it expects U.S. farmers this spring to plant 89 million acres of corn, down from 90.6 a year ago, and 83.5 million acres of soybeans, down slightly from 83.7 last spring. The agency will release its report on prospective plantings the final day of March. Elaine joined us Friday morning to look at the latest movements in corn and soybean markets. The projections and numbers that we're getting from USDA's forum this week, how do they come up with those numbers?
I think it's just economists sitting in a room making projections based on just typically what you would expect given the market conditions that are in place and given the trends of the past. But it's not based on actually talking to farmers or taking any real data. It's just sort of a projection of a trend, and it's just a starting point. You know, we don't have any way of knowing what the 2015 planted acres will be at this point. Nobody's been surveyed. We don't know what the prices will. I mean, we don't know anything, but we just need a starting place to start making projections into the spring.
Using it as such, then, for the acres that we'll see at the end of March, the estimates, what do you think it's close? Do you think it's along those lines?
I think they made some very reasonable baseline projections this week at their Outlook meeting because they kept corn, pretty steady, 89 million acres. So this wouldn't be like a huge 90 million acre apocalypse or anything like that. And they dropped a bunch of wheat acres. I think the most bearish piece of information there is that they showed that the wheat acres would go down and yet ending stocks would increase by 10%. So they're saying that they're expecting to have lots and lots of wheat in the U.S. and not get it shipped out. And hopefully for the folks who have to plant wheat, who have to keep it in their rotation, hopefully the market responds this way and the wheat acres actually do go down like that. Otherwise that ending stocks number would be even more apocalyptically bearish.
What about the ending stocks in corn and soybeans?
Yeah, they showed that the soybean ending stocks number would come up and that the corn ending stocks number would come down compared to the previous year, which makes sense, right? They're just showing, a general leveling or comparison of favoring one versus the other and coming back to an equilibrium.
So old crop soybeans this morning, at least as we talk, are hanging above $10 a bushel. Do you think they'll have to fight hard to stay above that level?
I think they really struggled at the first part of the week to find some willing buyers staying above, and that seemed to be the level. Like if they could make it there, then they might be able to continue this trend, and if they couldn't make it, the volatility could have gone back the other way. But the soybean meal was really the leader, so there's definitely a demand for that soy protein, and they continued to make these gains even while the Chinese are on their Lunar New Year holiday. So it's not just Chinese buying necessarily, not just the last dregs of that before the South American harvest comes to market. So I think it's quite a strong signal that yes, they might have some continued support here.
Record soybean crop in the U.S., record crop in Brazil, likely a record crop in Argentina. How much of it is factored already into the market?
I think the steadiness that we saw before this week, thought that we're going to have those huge crops. I think there's still an opportunity for those record large numbers, the 94.5 million metric tons out of Brazil, for instance, to be pared back. You hear from private estimators that there's slightly more damage in Mato Grosso do Sul and places like that that maybe are not fully factored in yet. So I think there's chances for little pieces of bullishness to come back in yet, but I think it's mostly, I'm not talking about a major rally.
Okay, let's talk about corn. Kind of stuck in the mud, I guess, over the last few weeks here. What would get you excited about selling?
I would be motivated to start making little pieces of sales already, but the old crop market, it stayed like in that 20-cent range for the past 2.5 weeks. It's very, very low volatility, which can be good news in February as we're averaging prices for crop insurance purposes. Sure. But as far as new crop, that 420 level in the futures market for the December 2015 contract, considering these outlooks for 2015 have another large corn crop and we don't have any reason yet to really worry about drought or a major problem in production in the U.S. yet, this is the time of year when you might start making some sales.
Tell me how the strength of the dollar is playing with the export market.
Yeah, it's not helpful, and it's particularly not helpful to the markets that really rely on exports, like wheat, for instance. We are really struggling when our buyers, Egypt, it can go and find cheaper wheat elsewhere, obviously, and it's struggling for the hog market, for instance. That's another market that really relies on exports, and we have a lot of competition from other countries that have weaker currencies, so it's not helpful to certain markets more than others.
Do you think that the dollar will continue to remain strong?
I do. I don't see any reason. The reasons that the dollar are strong now are that investors need a place to park safe money. There's negative interest rates in Europe, so we're still the place to come to for that. There's belief that the U.S. economy, can be optimistic about that. So all of those factors that have contributed to make the dollar this strong so far are still in place. The dollar hasn't been rushing to new highs in the past couple of weeks, so maybe it's time for it to start doing that again, which would be bearish to our commodities that we're trying to sell. Yeah.